Want to welcome everyone to Global Markets Radio Week Ahead. I'm your host, Andrew Spanton. Sunday, oh baby, Sunday, October the 30th, 2011, 5:15 p.m. Eastern. And the Northeast is digging out. Almost 3 million people without power. Amazing. I can't believe I have. And I'm like, there are people left of me, north of me, south of me, and they don't have power. But I got power. I'll take it. We got a big week ahead. Big week ahead. Big week ahead for the Dixie. Big week for the S&P. Big week for the dollar. Big week for the S&P. We've got lots of data coming up. Non-farm payroll out of the U.S. That's on Friday. But before that, we got a ton of data. We're going to go over it. Australia. Rate decision. That's a big one coming up in 24 hours. A little more than. I don't know. Remember, they're supposed to be more on the dovish side. As of right now, we got dollar yen gapping down a little bit at a new multi-year low. Dollar yen, we got a new multi-year low. Oh, look at that. It controls everything. Gapping down. Well, I'm doing that on purpose because I'm at the red line for the recording. You'll have to just turn your volume up, baby. But I'm talking to my premium members, which are in my premium chat room, which, remember, you do have the year-end special, which you still could take advantage of that. Email info@globalfxradio.com to find out more. But this is a very big week because we're either going to get a complete breakdown of the dollar index. We're going to take out 73.70 and collapse, and the S&P is then going to explode over 1350. Or we're going to sit here and stall. Listen, nothing goes up in a straight line. If you've been following me, you know I have not fought this move. I'm a bear, but I'm a smart bear. I've actually been a bull. We've been long last week. Great week going long, believe it or not. So, very important this week not to get too carried away. A lot of the news, a lot of macroeconomic data is coming out. Chicago PMI, Canadian GDP, London GDP. We get HSBC file manufacturing from China. A ton of rate decisions, right? And we get Trichet is out, remember. We get the new boy coming in. So his press conference is going to be very interesting. Remember, Thursday, since it's daylight savings time, the press conference is until 9:30 a.m. Eastern. Make sure you recognize that. I always get screwed up sometimes. How the whole world doesn't do daylight savings time at the same time is moronic. Just like how the whole world does is Celsius and Fahrenheit is moronic. But so much for the one world, huh? And I will be doing a rant. I will be talking about how the Germans have benefited tremendously from a weak euro. How this is a joke. How the Germans are a joke in basically not bailing out the Greeks because the weak euro has made them trillions. Not with a B, with a T. The Deutschmark will be trading at double par right now if it was not part of the euro. If the euro broke up right now, Germany had their own currency, it would be 2-to-1 to the dollar. The yen under par. Think about what that would do to German exports. So I'm going to do a little rant on that. How Germans are a bunch of hypocrites and they don't really realize that they're spending nothing and thus keeping the euro below where the Deutschmark will be trading. Because even with good news, it's still not going to get the euro to where the Deutschmark would be. So I'm going to talk about that a little bit on my rant. But we get a ton of data coming up. A ton. And then, of course, ending the week, we get non-farm payroll. U.S. I know I spent 5 minutes on this, but very important. Dollar index coming up to a very crucial spot. I mean, you see the weekly for 10 years. I mean, look where we are. We could go into a freaking free fall. Now, again, with the S&P exploding, we were down here. That was 1350 on the S&P. So again, I think that we start to get more of a general move. We start to get a little more cross rate movement, continuation. Commodity currencies maybe underperform actually, and the European currencies outperform maybe. I don't know that's going to happen. I'm just saying something changes a little bit. I don't know if it's going to be straight one way. When we take a look at the S&P 500, at 500, we got a monster channel line on the weekly. Monster. And by the way, Paul Krugman, New York Times, this guy is a joke. How he won an award, well, he won the Nobel Peace, I forget what he won. It's a joke. This guy is a bearded, fat-faced moron. He doesn't even look the camera in the eye or the person in the eye in the interviews. He's Mr. Shifty, and all he does, right, Nobel Prize in Economics, all he does is say, oh, well, I said that. He didn't. He wanted more bailouts. He wanted more bull crap, more government spending. Government should be doing more. He was in favor of the stimulus. The stimulus was a total disaster because it wasn't controlled. Tons of waste. Solyndra. He wanted more of that. He wasn't talking about investment in the future, should be revenue net neutral, things of that nature, more conservative base. He was not. And for him to twist history around like that is disgusting that no one calls him out on it. Just like Barney Frank. It's disgusting how these people can rewrite history. I swear. Who are these guys? I'm wrong, I admit it. Hold me to the fire. No problem. This guy never admits he's wrong, and he won't look you in the eye, and you never trust someone when they don't look you in the eye. All right, so weekly. S&P. Big resistance at that 1330 level. We go for 1350. I mean, if you're a true technician and you measure the move, what was it? 1370 to 1070? That's 300 S&P points. We go to 1670. Can you imagine? I can't. It's not giving it to me. Look at this out. By the way, this is a monthly. You know how bullish this monthly candle is? Outside, took out the lows, closing big. This is a tremendous, technically, bullish candle. It don't get no better than that. I mean, look what happened when you get an outside candle like that. Back in 2009. Boom. Straight up to the moon. So we could grind. I don't think it's going to be so easy. Let's take a look at the euro. I know I'm 8 minutes in, but, lots to talk about. That's what the week ahead is all about. And again, starting even with tonight, we got New Zealand, a little building consent number, not so big, but, inflation gauge out of Australia. Big event is tomorrow. Got German retail sales, not the biggest. Remember, Germany's an exporter. Not the biggest thing in the world. CPI flash for Eurozone, that is more important. And Germany came in online on Friday, I believe. Look for that to come in line. Eurozone unemployment rate is supposed to hold steady at 10%. Canadian GDP, that's the big one. This dollar Canada, we'll get to it in a second. Big. And then US Chicago PMI. Listen, with US GDP at 2.5%, I was wrong. And I was short the dollar. I can't believe I lost money on Friday. Joke. Not much. Things came back in the end. The Aussie came back. I think I actually broke even. But it should be a very good continuation. We'll see how the markets open tonight. No bad news over the weekend. All pretty much good. Nothing really bad. All systems go. We look at the weekly chart on this euro dollar. Monster channel line we're coming up to. Just like the S&P has its monster channel line, 1330. Well, this one on the weekly, this is about 143.50. A little lower. So, this should be a very, very, very interesting week. We could reverse. We go down first and then come up. Up, down, up. Up, down, up, down. You know the way it works. We never know how it's going to end up, but I'll tell you what. We're probably going to hit this channel line at some point this week. I would think. And I tell you, this dollar yen, it is collapsing. It's busted. I think we could get a meltdown tonight, people. I'm calling for it. I think that this Japanese is just, listen, no matter how you want to slice it, is dollar yen undervalued? Of course. But the chart doesn't lie. Look how bad this looks. We've now been futzing around for 2 months. I'm sorry, almost 3 months. We've been in a 200 pip range. Something's coming, and it's not from the upside. Look at this. Reverse this chart and not tell me it's not bullish. Pull, flag of biblical proportions, and we might pull down again. And you know what? It's about 200 pips on the pull. We might get down to 74. And we might be there for 5 minutes. Believe me, they'll do it, and before you know it, it'll be 74, it'll be 75, your head will turn. But if they do break it, I think you buy the break. Just hold your breath. Hold your breath as long as you can, because it's going to go lower than you think. And then scoop it up. Believe me, when this thing collapses, don't be a hero. Wait. So look at this euro yen. You know, a little meltdown to 105 on a weekly, on a dollar yen collapse intraday, and then stalls at 105. I love it. So we get them on. I think these things have turned a little bit. I think we get more of a continuation bounce. You know, just like the S&P is bouncing up to that 1330, well, we might get a bounce to 110. It's only 300 pips. But again, I think we get that pullback. Euro sterling, you know, trying to break out here on the weekly. A little bit. Took out 4-week, 5-week high. Broke the whole downtrend. I have to say it does look kind of bullish, and I'm a bear. So we draw a channel line from the highs to lows. And we might get up to 89. At the end of the day, no freaking way. Euro Canada, I'll tell you, this thing's looking so freaking toppy. I'm telling you, I love this trade short. Look at this weekly chart reversal. That's a gorgeous looking shooting star, but can you trust it? Is it safe? Email me if you know what movie that's from. Is it safe? I haven't said this in a while. I don't know if it's safe. Dustin Hoffman, I'll give you a clue. Yep. You got it, Janky. So I still think 142, 143, I would love it to get up there and then sell. And again, I think then we collapse. Certainly down to 134. Easy. Going back to dollars, dollar Canada. Nice reversal last week. I think this dollar Canada could have more to go. Look, we had the shooting star inside. Yeah, I know. You know, this was it. But we're down almost 4 weeks now in a row. We're getting a little bit oversold. But again, this thing trades with the stock market. Commodity currencies trade with the stock market. And if US GDP was 2.5 and China's going to lower rates and metals are going back up, I think this thing could go back down. Certainly, we should test 98. 98 should be a given. A given. Remember, this thing was falling off a cliff because the U.S. was going into a double-dip recession. That's not happening anymore. Look at this dollar Swiss. Weekly, rolling over. I think you do the fib on this one. I think we can easily get to 85. Easy. Only another 100 pips, and then we're talking about 82. Tell you this, dollar Swiss is going to collapse. I think you got to be short. Take your trade, but I think you got to play it on the short side. Cable, another one. The only problem with cable is if euro sterling is going to go up, how is cable going to go up? Like this. You know, that's the problem. Euro's got to explode, but then it goes to 143.50. So cable, it looks good. Listen, sterling has been bouncing ever since they announced QE3. Ever since they announced QE3, this sucker's been going up, and I called it. I have not been long it. I was long it down here. But this last week, no. So, I think cable goes higher. Listen, we're getting into overbought territory. You can tell, look, 1, 2, 3, 4 weeks up. We're getting overbought. We get up to 164, sell. And again, you take a look at your Fibonacci. Remember, Fibonacci is a percentage of retracements. How high can things go once they retrace? And it took it out. Didn't take out this one. And, with Fibonacci, people differ. There are people that are steadfast that you do from here. There are people that steadfast you do from the high. I like to look at both. Because you know what? If it does take this out from here, then where's it going to go? Well, it could stall at that one. So I like looking at both. Me, myself, and I. Pound Swiss. Oh, I'm rolling through them. Another one, rolling over. Rolling over. This baby looks like it wants to go lower. Certainly testing 137. Pound Aussie. I'm telling you, these pound commodity currencies, oh my goodness, they're toast. They've broken down. Look at this. Unless the futures are down this week, we have now broken this little, uptrend, double topped. Listen, Pound Aussie, I was a big bull when the stock market was going down. I became a bear once it started going up. This thing trades lockstep with the stock market, especially if Euro Sterling is going up. So we take out this whole 150 level, 149.50, say hello to 148. Say hello to my little friend. And with New Zealand, remember the big news out of New Zealand, people. Hello? They might have to raise rates. Remember, they're rebuilding from the whole, am I going to say it right? Church Christ rebuilding. So this one has a long way to catch up. Even Aussie Kiwi. I think there's a big trade in this New Zealand pound Kiwi. We take out 95, say goodnight. Nice outside candle last week, right? Took out the highs, closed below previous close. I love it. Short. Abso-freaking-lutely. Even pound Canada. Look at this one. This one looks like it has more to go. Top of the range. I mean, I'm bearish on the pound only because Euro Sterling is going up and commodity currency. So you could do Euro Canada. Again, I think there might be one more pop. But, maybe the euro goes up 250 and, dollar Canada goes unchanged. Something like that. But this baby, toast. Absolutely. Let me look at the Aussie. I mean, and again, you do your Fibonacci. If one does it, if there's one cockroach, there's usually another one. So one takes it out, and we did. We took out the 61.8% Fib, people. Big. We didn't even take it out by 10, 50, 100 pips. We blew the door open. That could easily mean one of two, well, pretty much. The stock market's going up. And I'll tell you what, if you measure your move, we pulled in, I can't believe it, 1,500 pips. This thing could go to 1.25 if you measure the move. What's 1,500 plus 1,100? Hello? 125. Can you imagine? I'll tell you what, we take it out, we're certainly going to 111. Certainly looks like 111. Absolutely. On the weekly, we got a nice little pullback. 104. I don't think it's going to pull back to 104. 106. Last week we didn't really pull back. Nothing. Straight up all week. And the hanging man, right? And then you look at this New Zealand. Well, let's look at the Aussie Kiwi also first. Aussie Kiwi. When we take a look at that, it's turning. It definitely is. But from a macro side, listen, we do have a rate decision coming out of Australia. If Australia is hawkish, and I got to tell you, I don't know. Because on one hand, you did have the dovish comments from them last month. On the other hand, though, you have a world economy that's sort of recovering a little bit. You've got China that might cut rates. You still have rebuilding from the floods over there. And you still got commodity prices coming back up. So I'm a little nervous about this Aussie Kiwi and this on the short side. I'm still very bullish on the Kiwi, but this weekly doesn't look, it still looks bullish. And you do your Fibonacci, this thing might have a little more to run, like 132.30, something like that. And you look at the New Zealand. Now remember, people, we are doing a webinar. It is a free webinar. It's for new people only. If you're an old person, no bother. I'll kick your ass out of there. I'll know who you are. I'll get the list. ForexNews.com, big sponsor. FXEDU, a sponsor. Can you believe it? We're doing a webinar, free webinar. We're going to talk about the relationship between commodity currencies and the stock market, as well as some setup candlestick charts to look for, technical patterns, as well as how to determine the cross rates, why they're so important. Oh, baby. Market's saying a 75% chance of an Aussie rate cut. Not on your life. No way. And if that's true, and I have to verify that, one of my members is saying that, then that's the perfect setup for the Aussie going up to the big. Because they're not cutting rates. Not yet. Not in my opinion. So again, if you have any questions about attending that webinar, that is November the 1st. That is, I believe, on Tuesday. You want to go to the website at forexnews.com, email them, info@forexnews.com, to reserve your spot. Only newbies, people that have never been to my chat room, they've never been to one of my webinars, haven't done one a year, but highly recommend. Take advantage of it. And then, of course, we'll be offering a 1-week trial to my premium service for those people. And then, of course, my year-end special, info@globalfxradio.com to find out. All right, people. Well, it should be one hell of a week. I'm thinking up, down, up, and then Friday, I don't know. I'm looking for a weak non-farm payroll number. I think it's going to suck. Non-farm payroll is going to be bad once again. My rationale is this. Jobless claims have still steady over 400,000 weekly. In order for a good, robust jobs report, you need clarity in Washington on tax policy, regulation, and you need jobless claims to come down. 350, 375 at least. We can't even get there in 2.5 years. Why now? So that's what I'm thinking. So I'm thinking this New Zealand is going up. Oh yeah, certainly 83, easy, big time. So again, if you have any questions, feel free to email me. Again, check me out on Facebook. My fan page is Voice of Forex. On YouTube, Voice of Forex. And of course, on Twitter. I highly recommend you sign up for the Twitter. I send out more twits than I do on between Facebook and YouTube. Voice of Forex, baby. And remember, premium people get premium twits. That's at GFX Premium on Twitter, but I'm not accepting you unless you're premium. Oh, baby. Andrew Spanton, Global Markets Radio, the only voice you'll ever need who truly loves to make you money. Ching, ching. Have a good one. Bye-bye.